For today's lesson, this is back to basics. Okay, this is back to basics. When you want to be a buyer or a seller, okay, in any trading instrument, anything tradable, always what you want to do is find a range, a trading range that price is trading in. So if you're on the monthly, find the recent swing high, find the recent swing low, and then that is your range. Okay, so if you have this range low, you have this high, that is your trading range, and then find out where we are trading at. Once you determine where we are trading at, you want to be considering only being a buyer when price is below 50%, and below 50% you are looking for specific things down here that will align up with your buy. You're not just going to buy because it's below 50%. You're going to buy if there is any let's say support, or if it's support or resistance, I don't know which one, but if there's a support level down here, it could be okay, there could be lots of wick rejection, it could be anything, but you want to be buying below 50%. Let's say prices, you are trading on the month, or let's say we are on the monthly chart, prices here, okay, price is trading here, and then your trading signal, whatever you use to take a trade, it gives you a signal to buy here. You don't do that. Don't buy it there, because the chances of this going your way is slim. If anything at all, it might not go up much more to offer you more profit. What you want to be doing is look below the 50% and see if there is anything that you deem as something you consider to use to take a trade for a buy. So it could, like I did mention, it could be multiple wick rejections, it could be anything, and with me it would be a down candle, right? So I'll look for the down candle here, right, and then I'll wait for price to get there. That's when I start hunting for longs. Okay, and then if you are a seller, okay, you want to price to go reverse this, and then I'll be looking for the up candle in here. That's where I'll be hunting sells. Okay, because in between, price can do anything and your stop loss will get tagged. So if you do business in between the range, okay, you are playing with fire. Price can go anywhere and price will stop you out. Okay, so the best entries or the best trade ideas, because we all trade based on probabilities. Yeah, no one trades with a certainty. Yeah, we don't trade like, okay, price will definitely do this. No one trades like that. Yeah, because if we did know price is definitely going to do this, like I keep mentioning, that I will be in a different country right now. Yeah, I'll be in a different country right now. Price doesn't do that. Okay, so what you can do, okay, is all wait for price to either come below 50% and come to a reasonable level that you deem as some place you want to buy or some place you want to sell, and then you can do your trading there. Like I said, with me it will be an up candle in here or a down candle down here. That's what I'll be interested in. Okay, so if we go back into this, right, this is a trading range between this high and that low. Yeah, that's a trading range, and this is a down candle. It's below 50%. So if it does give me reasons to be a buyer, okay, if I see anything that is reasonable for me to be a buyer, I will buy it. And you saw evidence of it yesterday here. Yeah, price did hit that down candle on the daily. Yeah, this one. And then it offers some form of a support on the 4-hour, and it gave this kind of move. Yeah, that's when you participate in buys. Okay, if you buy anywhere in here, you will be playing with fire. If you buy anywhere in here, okay, you'll be playing with fire. Why? Because that is not an area to be considering a buy. You could be using anything. It's not just my way of trading. You could use anything, but whatever you use, always consider to do business below 50%. And below 50%, you have to even go further down to see where we call it psychological area, where most people will feel uncomfortable, which is here. That's where most people will feel uncomfortable, because the idea about trading is that when price retraces, because most people use Fibonacci, a lot of people use Fibonacci. When price retraces to like a 61.8 level, okay, they start looking for buys. A lot of people do. Yeah, you'll be surprised how many people use this tool. So they will start buying here, and then price will go against them. They will say, okay, maybe it's going to the 79, and then they'll buy here, and then price will go for them. But ultimately, it might stop them out, and then price will push higher. Why? Because this is a psychological area. People will be jumping on this pair, trying to buy that area. Okay, so what you want to do is patiently wait for your setup, we call it, or your reasons why you want to buy it. Anytime you want to be a buyer, you have to have a reason. My reason is, okay, I want to see price hit it, break structure, retracement, and then I'll buy. That's my reason. So when price hits this level, I'm not just gonna jump in and be a buyer. No, I'll wait for my reasons to line up. So if price drops into this, let's say this is the level, I've done it wrong, right? This is the level. Let's say this is the level I've marked here. If price gets here and it doesn't break above this high, I'm not interested, like we did see yesterday. Yeah, I'm not interested. And then price will drop that down, no problem, and then it come back up. If it doesn't break this, I'm not interested. Why? Because we are trading at a level that I'm interested in being a buyer, but it's not giving me my reasons why I want to buy. So if the reasons has not, if it's not giving me the reason yet, then I will not be a buyer. So I'll wait. If this one breaks up and take out this side, then my reason has now been fulfilled. Then I'll start looking for my longs for a continuation to the upside. But the range I'm looking, or where I'm looking for this to form, yeah, is here. That's where I'm looking for it to form. I'm not looking for it in here, I'm looking for it down here. So wherever you're trading, or whenever you're trading, consider the range. Yeah, consider the range. So this is a range. For currently, this is a weekly range. Yeah, that's a weekly range. Go into the monthly. This is a monthly range. Yeah, that's a monthly range. If you drop down to the 4-hour, now this is a 4-hour range. So when I say range, this is what I mean. So every time frame has got a range. So depending on where the market is flowing to, currently the 4-hour is flowing down, right? So if you want to be a seller, this is where you sell. You want to be selling up here. Yeah, you don't sell down here, because that's not That's not high probability trading. You want to be selling up in here. Okay. If you drop down to the hourly has also got its range. Currently, the range is between this low and that high. Yeah, that's the trading range we are in right now, because it's formed a high and it's formed a low here. So that's our hourly range. And if you drop down to the 15 minutes, 15 minutes has also got its range. This is the 15 minutes range right now. So every time frame has got a range. So depending on your trading style or whatever you use to trade, these are the ranges you want to consider. And you always want to be doing, if you're buying, you want to consider buying below 50%. And if you're selling, you want to consider selling above 50%. So that's the whole idea of what I'm trying to communicate. Do not do a selling when price is below 50%. You don't do that. Yeah, unless you really understand what you're doing, don't attempt it at all. Okay, because you end up giving your money to Mr. Broker. Okay, so if you want to save yourself some money, always consider yourself the lowest probability will be selling below 50%, and the lowest probability will be buying above 50%. The highest probability is buying below 50% and selling above 50%.